Hello everybody, this is Bojie He, your local Bay Area real estate expert, and welcome back to my channel. Today I want to talk about two things. Both are from the recent post of President Trump. One is the 50-year mortgage, and the other one is the $2,000 dividends for everyone. And a lot of people have been emailing me and private messaging me and asking me what I think about these two things. And normally, I don't like to spend too much time talking about things that are still just a proposal, especially just a social media post. But since a lot of you ask, I am going to take this video to share with you what I think. And quite frankly, there are a lot of influencers and experts online talking about giving their opinion about these matters. And quite frankly, I think that a lot of them are missing their points. So let's first talk about the 50-year mortgage. So the idea of this 50-year mortgage proposal is a way to improve affordability by stretching your monthly payment to 50 years instead of 30 years. So mathematically, it will lower your monthly payment, and therefore it will increase your home affordability. So all good. A lot of experts that I have seen online are weighing in on the pros and cons, saying that a 50-year mortgage could lower the monthly payment, but not by a whole lot. And secondly, um, you'll build equities a lot slower, and you're going to be paying more interest over the lifetime of the loan. All that is fine, but honestly, if you ask me what I think, this is not, if the 50-year mortgage becomes a product in the future, it's not going to be mandatory. It's going to be optional. So just like any new product being introduced to the market, somebody will take it because it works for their situations and others won't. It's just a matter of a choice. So I don't think that's going to be a big deal. However, if the goal of the 50-year mortgage is to improve housing affordability, to make home or monthly payments more affordable again, then the way that the 50-year mortgage is currently being proposed, based on the social media, I don't think that'll do it. I think there's going to be terms and conditions applied. So, for example, if you think about this, right? Every time when we're in a situation when we have more buyers and not enough housings, such as the problem that we're facing for years, low inventory, then there's going to be more buyers for every houses. And then if the 50-year mortgage is available for every buyers to utilize for new purchase, then buyers are going to use this as a product to increase their bid and drive the prices up. We've seen this happening when the Fed's lower interest rate, and when interest rates became lower, the monthly payment became so much more affordable than before. But look at what happened to the prices. Price went up, actually went way up, especially during the pandemic, and still making the home much less affordable than it was intended. And the same thing will happen with the 50-year mortgage if it gets weaponized by massive buyers when they're overbidding on homes. Then whatever the potential savings as a result of the 50-year mortgage, that savings will be absorbed by the rising of the prices. And it will again stretch your monthly payment as a result. So the way I look at it, a better proposal would be, I'm just thinking out loud, have a 50-year mortgage as an option for refinance only, not for new purchase. And then when it comes to refinance, you put in some nuances, some terms and conditions, such as must be primary homes, for example. I'm just thinking out loud, or you must be living in this home for X number of years, or, etc. That way, for people there, another criteria could be if you're making a certain amount of money or below. And in that case, if you as a homeowner are running into a financial hardship, then you could use 50-year mortgage to refinance and lower your monthly payments. And then later on, when your financial situation turns around, you can try something else if you want to build your equities faster as an option, but not as a new purchase options, so that the institutions or the investors, flippers, or every buyers can weaponize this product and drive the price up. So that's just what I think. I wonder what you guys think about this proposal or this whole product. Comment down below and let me know. And if you are the lawmaker, if you are onto this proposal and trying to actually make it sign into laws, and if you like my idea, hey, contact me, and I actually have more ideas. I'd be happy to sit down with you and go over some of them. Now, the second topic is the $2,000 dividends for everybody. Now, this comes from a recent social media post from Donald Trump on the True Social Network, which goes like this. The people that are against tariff are fools. We're the richest and most respected countries in the world, and we have record high, stock, 401k, zero inflation, and we're taking in lots of revenues, and we will be paying what, $2,000 for everybody, excluding the high income people. That's basically what the post says. And the original idea of the dividends didn't come from Donald Trump. If you remember, at the beginning of the year, when Elon Musk was in charge of the Doge operation, he proposed to Donald Trump by saying that, the Doge is saving government a lot of money, and we could actually take some of the savings and gave every American $2,000 as dividends. And at that time, Donald Trump's attitude was like, if you remember, he said something like, it goes along the lines of, you know what, I like the idea, I haven't thought of it, but I'm open about it. And now, based on the reading of this more recent post, he sounds more certain, like this is something that he is going to do. I just have a few questions based on the information that he provided on this social media post, because I don't think the numbers adding up. So there's a couple of clarifications that I would like to see in the future. So number one is, what do you mean by everyone? Are you talking about literally every US citizens, including babies and elderly people, or are you only talking about the people that are in the workforce? But either way, let's quickly look at the numbers. So if we're looking at everyone means literally everyone, then we're looking at the entire populations, about 350 million people. And if we're excluding the 10% high income people, let's say we're looking at the 300 million people. Now, in order to get $2,000 for everyone, then we need about $600 billion in the total dividend pools. If we're talking about only everyone as everyone in the labor pool, we're looking at probably about 170 million people. And then again, excluding the high income people, we're looking at, let's say, 150 million. And $2,000 each, that means 300 billion would be the total dividend pool. So that means we either need 300 billion for the workforce everyone, or 600 billion for everyone. And where is the money going to come from? Now, Donald Trump in his social media post says we will be, we're taking in so much money, we're taking in so much revenue. And then at the beginning of the post, he says people that are against tariff are fools. So I have to assume that he's talking about the tariff revenues. So the question becomes, do we actually have that much money from the tariff revenues? So if you look at how much tariff revenues was coming in September, it was about 31 billion. And if we annualize that amount by multiplying by 12, that's about more than 300 billion, maybe 330 billion total. And in reality, we know that you cannot use 100% of the tariff revenue to pay as a dividend. A portion of it, actually the majority of the money, will have to be spent on other operations. And he's talking about paying down on government debt. And currently, in the fiscal year of 2025, the government debt overspending is about 1.7 trillion. So if you're trying to pay down on the government debt using the tariff revenue, then we're looking at a huge number ahead of us. And by any calculation, I don't see where the $2,000 per person, that money is going to come from the tariff alone. So this leads me to believe that this is just a vision of Mr. Trump rather than something that's currently being done. And if you notice, for as long as I have been observing Donald Trump's speech, he does tend to have a habit of speaking future potentials as if it's already done. That's one of his speech patterns. You can see that in numerous examples of him, such as building the wall and making Mexico pay for it, and numerous other things. You can find similar speech patterns in a lot of influencers, athletes, and leaders around the world. I remember Muhammad Ali is one of the most famous person for saying something before he even know that happens. Like he says something like, uh, I am the greatest. I say that even before I know, right? And you can find similar concepts being introduced in Napoleon Hill's book Think and Grow Rich, which basically is a what he called the auto suggestion. You're basically speaking your vision into reality. And I feel that Donald Trump is also that type of person. And so this might be something that he is actively working on, but I don't think that is something that you can expect happening to everyone anytime soon. And because I don't think that there's enough money in the dividend pool. However, there could be another possibility of basically printing more money next year to pay for the $2,000 dividends, because this reminds me of what just happened last month, and I did make a video about it. Was the Fed's lowering rate and announcing the ending of quantitative tightening, the QT. And when QT is ending, that means QE is starting. And in my last video, I did say what that would mean. That means basically more money printing is coming. And this could be a possibility. And Donald Trump might be thinking, well, if you guys are going to be printing money next year, might as well print some for everyone. So in other words, are we going to use the total tariff savings to pay for everybody's dividends? If so, I don't think $2,000 per person is achievable. We might be getting some, but not $2,000. It's more like, I don't know, 50 bucks to $100, right? If you want to get the $2,000 dividends, then you could possibly or potentially be printing more money next year for that, which will cause more inflations in the long run. Either way, that's my interpretation, and nothing is in concrete, and there's still a lot of clarifications that needs to be had, such as what do you mean by everyone, and what kind of qualifications, and etc. But most likely, I'm guessing that people should be expecting some money coming in forms of dividends. It's just we don't know where the number is coming from and what the number is. But anyways, that's my 2 cents for these two topics. And I hope you guys get some values out of this video. And if you like this type of video, I appreciate if you can like and subscribe to my video. And if you have any real estate related questions, concerns and stuff, or plans happening around in the Bay Area and have questions, feel free to reach out to me. And I'm always available to sit down and help you with a good strategy to navigate in today's real estate market, whether you're looking to buy or sell. All right, that's it for this one. Thank you for tuning in. I'll see you on the next video.